Good morning. It is 8:01. My name is Vince Lanci, and this is the Gold Fix. We have a couple things to discuss. This is an evolving process, as you know. There are traders who can teach and traders who cannot. And I believe I'm a trader who can teach, but organization is not my strong suit, but we're getting there. So, as the evolving process comes, we're trying to create a format that's easier to follow, so you can get the most out of this. On that note, uh, if you are listening and do not have screen access to the Zoom for some reason, you would want to go to the opportunistic trader into the insight section. Presently, that is accessible to all. At least this post is. And you would look for the notes for October 25th Gold Fix. And that will make it easier on your eyes, whether you are or are not following along with the screen that I'm sharing. So I'm going to click on that. All right. So we're going to go through it this way: where the markets are this morning, describing the gold and FX pairs, any observations from a trader's point of view, as well as macroeconomic drivers, where global equities are this morning, very briefly. And then we'll describe the gold tape yesterday to see if what we said yesterday gave birth to any fruit. In fact, there was a trade yesterday that we did do. There were several trades. What's going on this morning? You see the little ovals there. If you've been following along, we're looking for that activity in the morning. What's ahead today? Even though it talks about yesterday, some levels for trading today, and palladium. I mentioned it in the offing as I was going off the air yesterday, and I wanted to touch base with it again today. Okay, so why don't we start from the top? Here's a snapshot of the markets at the time that I did this post. So basically, I put together this data as close to the open as possible, so it is relevant. I mean, all the data, all the information that is collected before the broadcast is in the past, so it's going to remain relevant. But we're trying to be as on top of it as possible for active type traders. We are serving more than one God here, and by that I mean people who want to read and learn, who may not be as experienced in trading but want to learn more, and may not be experienced in gold trading and may want to learn more. But we are also serving our active subscribers who are active traders, and those people look for levels. And while we won't be giving away the barn here, we will be giving ideas, and then the answer keys will come in the subscription chat. So yes, that was a plug. If you're getting something out of this, and you're getting something out of the AM roadmap, and you are an active trader, you would be remiss. I say this because as one of the team members, I learn. If you're a person who's been in a trading room, on a trading floor, or literally in a trading pit, and you thrive in an environment where you have multifaceted ideas coming at you, whether you agree or disagree with them, a pressure cooker environment, you really want to check out what we're doing. It's pretty good, and it's nowhere else. At least it is nowhere else in the real time, skin in the game uh, uh, group of professionals that we have in every level of every market. A little cold coffee for me. Let's get going. Okay, so that's the snapshot. I'll show you the live screen during the chat, but that's a snapshot. I put that up. That's as I put this together. Okay, from there you can see the dollar index is a little bit weaker. We'll call it flat. Gold is down $2, 1234.40 at that time, and this came. I think I did this at 7:37. So this was about 7 minutes before the ECB announcement. So that's going to change things when we get to active trading. We're not there yet, but when we get to it, there are market reactions that will happen. Like gold is selling off a little bit more. The ECB was expected to leave rates unchanged. They did, and I'm going to tell you just to give you that so we can move forward. The euro is trading 114.10, so the euro is on the news of unchanged is basically not doing much on that. Doesn't mean it won't later on, but let's move on to that. Okay. This morning, between about 7:30, gold was slightly lower at 1235.70 after first extending U.S. gains from yesterday. Remember, yesterday the gold market rallied strong at the end of the day, almost eerily concurrent with the sell-off in stocks. You may know that I do not believe that gold is a safe haven in stock corrections. I believe it's a safe haven in stock prolonged, protracted bear markets. Doesn't mean it's not a trade. All right, US dollar, DXY flat, stable at 96.35 with a low of 96.21 and a high of 96.38. Yes, the dollar does not seem to be having much of an effect on gold the last 2 or 3 days. It seems to be muted. In fact, gold has been strong, relatively strong, in face of a significantly stronger dollar. The euro has an option expiration near 114.20 today that may play with gold. I suspect that that expiration is probably tied with the rate decision. I don't know what time of day that's going to happen. It may have happened already, but I know that there was one today. There was a bigger option expiration. I won't say the size; it would give away the source. Uh, Near 112.50, and the yen is 112.39. Okay, so there's your flow. Uh, I put up the onshore and offshore yen. Okay, the CNY is the onshore yen, or yeah, I'm sorry, yen, yuan. The Chinese yuan pegged it 52 pips higher or weaker at 6.9409. That is third or fourth or even fifth day in a row that they've done that. Uh, uh, Putting it at a level hasn't been that weak since, I'm going to say, August 17th. So they continue to, in an orderly fashion, so to speak, uh, debase their currency or weaken their currency to make the cost of their goods cheap, ostensibly to offset prolonged tariffs. However, the the offshore yuan, or the float that trades globally and really doesn't care about the domestic uh, uh, fixing, it's actually a second currency out there, is trading as high as, well, it was trading as high as 6.96 on a spike. It's trading 6.9489 now. So it's called 6.8, 6.95, we'll call it. So the offshore yuan, or the global perception of Chinese policy, is saying that they're going to be weakening it even further. Okay. Stocks quickly. Asia had recovered nicely last night after a very weak opening. The Shanghai Composite, for example, recouped most of its losses, actually going into positive territory after dropping as much as 2.8%. One can assume that that sell-off was on the back, tied to was not helped by the U.S. sell-off. Europe, going into the ECB announcement, was stable and firmer, slightly after yesterday's uncoordinated global stock rout. I say uncoordinated because if it's bad news, they didn't mean it to happen all across the board. But if it's good news, the central bankers will all take credit for working together. The DAX stocks and FTSE were all up modestly going into that. Let me see if there's been a major change while we're talking since the ECB rate cut, or rate, not rate cut. Okay, the DAX is still up about a third of a percent. The stock 600 largely unchanged, slightly higher, and the FTSE is flat. Okay, so Europe is done as far as I'm concerned. Doesn't mean it's, I'm not going to ignore it totally, but the ECB rate was left unchanged. Stocks were discounting that, and stocks didn't move on that. So I would tend to think that any this is a general statement. I would tend to think that any move in European currencies or stocks after 8:30 would be driven by U.S. policy or rates or data or market movement. So they were the dog, now they're the tail. Unless Draghi has something crazy to say, we'll do whatever we have to do, which is, he's a dove in that respect. All right, getting to gold. All right, yesterday, it was called weaker. If you remember, we'll put a chart up on that. Yeah, that's there. This chart here is relevant to both sides. So yesterday was called weaker after no apparent buyer materialized in that 12 to 4 a.m. time frame that we have been following, and a stronger U.S. dollar. If you remember, during yesterday's call between 8 and 8:15, I had a sell signal, and there were two trades that were given. One was you could sell it with a stop out at 32 and change, I think, and the other was you could look at it as a possible reversal, and you can buy it with a stop at new lows on the hourly candle, and or buy it on strength. Now, if you remember what I had said, I like to on the system that I use, I tend to ignore the first hour. So I had an hourly signal. Let me put the chart up, and so you know what I'm talking about. All right, this is an hourly chart, and I want to focus right in on this time frame. All right, the rectangle. Okay, the first bar of the rectangle is the red down, is the down candle. That is, I took out the Bollinger Bands that are part of the system just so you can see the chart. Uh, that candle was a sell signal. I did not sell it. It was the first hour of the day for me. My hour starts at 7:30 on the system. And the second hour is when we were broadcasting, and that candle, which makes the low and is green, was at that point slightly negative, and it looked pretty bad, but the hour wasn't up. So I think at that point during the broadcast, I said, almost quoting myself, you could be short with a stop at 32 and change because that coincided not only with my system, but with that white trend line. You could be long right now, which was like 12:30 area, with a stop out on new lows. So you could do that, or you could buy strength, which is buy strength off the lows, which is something I'm more apt to do. And in fact, just to get it out of the way, uh, when the market went above 32 and change, I got a negation of the volatility lower. Does not mean you got a negation of volatility. It just says a trend reversal. We took a position long at 32. Um, 32.20 with a stop at 30.30, uh, automatically generated. Upside trigger, not really. Upside target is usually not generated, but we created a one based on risk reward. I think we were risking $2 to make four, and our level to sell was 35, 34.90. That's right, 34.90. And well, the market 35.90. Sorry, the market in the next candle, right? You see a nice up candle. The next hour, right? That's a decent one with a little bit of wick above, and then the one after that, still in the rectangle, almost at the end of the rectangle. You see a long wick above with a small body below, very ugly looking candle. But during that hour, the market started out in an orderly fashion higher, hit 1235, hit 1236, right? So we got filled at 1235.80 on a 1235.90 MIT order, and just whooshed up in a minute, a dollar or so, and and then just immediately reversed. So it seems to me that either an algo stopped in, an algo stopped out, or a weak short stopped out. But it was met with selling, aggressive selling, and that candle finished looking horrible. The market then proceeded to sell off. Uh, so at this point, you have two trades you could have done. You could have sold the open on a signal that I had, which I didn't. You could have bought that bottom, which I didn't. Buy it coming off the bottom, which I didn't. You could have bought it on strength on a negation of the system that I use, which I did, and then get lucky on a fill because some knucklehead had stops right where I had a sell order. Um, and then at that point, you could say, well, at that point, all bets are off on systemic trading from my algorithm. And then you're looking at, I would say you'd be looking at that trend line, and we broke below it. You traded for now, we broke it back above it, and then the market just decided to rally for the rest of the day. And when the day was over, U.S. time, call it 2:30 if you're looking at the settlement, but I look at it at 5 because I look at the Globex close. The market continued to rally in Asia until 12, between 12 and 4. So I'm getting ahead of myself, but that was yesterday's activity. Today's activity is in the final oval. We're going to come to that. We're going to come back to that in a second. Um, all right. So, all right. Where are we? Okay. All right. So yesterday, here's what I just said. Right. All right. Called weaker with no apparent buyer materialized between 12 and 4 a.m., which is what the chart coincided with. Proceeded to reverse between 8 and 9 a.m. We entered a trade then. Harsh algo type stops executed between 10 and 11. Were promptly sold into. We took a profit there. We got lucky. Market dips. You saw that below that little trend line there, and then rallies in orderly fashion the rest of the day while U.S. dollar remains stable and stocks take a nosedive. So it wasn't dollar driven. Uh, People were buying gold. I don't know. Maybe it's just it's in vogue. Maybe it's beginning of a serious sea change in the sense that uh, there are some people. There are definitely some people buying gold because stocks are lower. I'm not saying they're right. I am saying they're wrong, but they may be right for the time frame that they're in. Uh, if you believe in things called fundamentals and value, things that used to matter years ago, you would say that if we are headed for an inflationary environment, that stocks have been rallying in anticipation of inflation because earnings would be debased and gold would be the last thing to rally, which actually is how it went down in the 70s if you look back there. Uh, your soybeans, your bread, your orange juice, as Eddie Murphy would say, go up in price. And uh, the last thing to rally is gold because you can't eat it. But it certainly is a hedge for inflation. Okay, this morning, all right, gold opens in Asia and extends U.S. gains. And by that I mean last night, extends U.S. gains to reach the 1242 area again. Again, that area is that's the second time we're up there. 1240, 1244 area was an area to take profits if you're long, an area to be leery if you're thinking about getting long, and possibly a high risk, high reward short. All right. Then again, between 12 and 4 Eastern time gives back all overnight gains. So either there was no buying, right? That's that last, see this, if you look at this chart here, that's that last oval. All those ovals are in the same time frame, give or take. And either there was no buyer during that time frame this morning and they decided to push it down, or there was that buyer turned seller. We don't know. But the market picked a direction at that time last night. Okay. Bringing us back slightly lower from the US close. So basically erasing all the Asia's gains and slightly lower. And gold is now 1234.70 as we speak. Give you a live update down about a buck 70 from the Globex close. Okay, today's US activity uh, gives us at least three okay. Ooh, okay. Today. Okay, that was yesterday. Yesterday's US activity gave us at least three trades, which were a gift to participants who were technical correlation and volatility momentum types. Technical, I would say those of us who traded around trend lines and possibly saw that buy level that I had as some sort of a morning star type of situation. I'm sure there are other technical reasons that I'm not that familiar with. Correlation, I would say stock market was selling off and gold started to rally. If you trade that way and you believe in that correlation, then you bought gold because stocks were coming off. You probably should have sold stocks if stocks were coming off, but hey, what am I? And volatility momentum types. Now, I say volatility momentum types. The system that we use, VBS, is a volatility momentum system, but of late we've been using it uh, trepidatiously as a regression to the mean system. Meaning, when a volatility signal is negated, should that in one direction, should that not mean a regression to the mean in price if volatility is continuing to expand? And we've been mildly successful with that as we look to optimize it. Yesterday was an example. All right. Today's levels. All right. So we've got some charts. We'll throw them up. Excuse me. I have a little bit of a seasonal thing going on here. All right. We are looking at, all right, this is the daily chart. Coming into today, okay, not speaking technically, but it will coincide with technical traders. Uh, Not bullish below the recent candle highs, bearish with a possible extension down to 12, 18. Uh, I'm not buying into that yet, but basically just say neutral to bearish below the highs made uh, 3 days ago. That's on my system. And we're not going to get a bona fide signal, a directional pick on the daily for quite some time. All right, moving to the daily, same chart, close up without the Bollinger Bands, but with those trend lines that I've had up for some time. Uh, uh, One of these white trend lines has done pretty well for itself, continues to function well as a technical level. Let's see how we perform today. Uh, uh, Technicians will tell you anytime you go through a line uh, sideways, it really isn't that big of a deal. So that's why that top white line seems to be something I should just take off, meaning the market doesn't care about it. But this line here um, that is showing up has mattered. It doesn't look like it matters that much, but when you go to an hourly chart, it matters. It matters quite a lot. But we're not going to have time to do that. But you'll see that on an hourly chart. If you look at yesterday's, it's been very good. Okay, Michael Moore's numbers for the technician, for the pure technician. All right, here we go. If we break above 1242 and back below, look for profit taking to come in. Clearly, this was written at 5 in the morning. Okay, so and Michael's been saying this for a couple days. So 1240 to 1244 my levels, 1242 is his specific level. So basically, get long above 1244, look for profit taking below 1242. All right, fine. His next profit exhaustion is 1265. Get short downside, get short below 1235. Well, we're about to hit that right now. Now, I'm not going to trade these levels because I'm not a technician. And I don't feel I need something of my own to line up with this. But certainly these are things to pay attention to. If we break below 1228 and back above, look for short covering to come in. So basically, he's giving you swing trade levels. Short below 35, cover at 28, short below 28. Then his next level seems to be 1212. The levels that I have been looking at and have been married to but need to update are below 1232 on a high volume penetration that would coincide with one of my signals. I would be getting short and looking for a washout. That said, if you remember yesterday, uh, I see no reason why this market can't have an orderly rally to 1250. Orderly might not be the right word, but a rally to 1250, which triggers stop between 1250 1260, and then start a retracement lower. Point being, the dollar is strong and gold is rallying in the face of it. That's a sign either of a fundamental sea change in the market, which never really lasts long in gold, at least for the last 10 years, last 30 years, or you have that's my warning bell, or you have a situation where you gold is reacting because shorts are covering the same way gold was getting hammered for no apparent reason for the last 5 months. So that's it. Levels for today for me, and I don't have strong feel on these. While we look at palladium, I don't have a strong feeling on gold's levels today, and it's not to say I haven't looked at silver. Just know that I do, but just not for trading purposes right now. Gold below 1235, consider being short. So for me, it would be using Michael's and my numbers combined. I would look to be short, possibly below 1232 with a 1235 stop. I would look to trade the range between 1240 and 1232 if you're a range trader. I would be scared to be short above 1244, but I would probably get a signal to to short the market if we go above 1244 and come off. For the downside, got it. Thank you, Michael. Um, all right, so we're going to wrap it up. Again, I'm going to leave you with this. This is palladium. I said yesterday, palladium has been a leader and it looks pretty toppy. And of course, it screamed higher yesterday after I said that. But it is weaker today. So if palladium has been a contributor to gold's rally in the absence of a weak dollar, and palladium sells off, what's gold going to do? Now, that's assuming that there is a correlation between the two metals, and I believe there is. Uh, uh, Not just me, people I think with more experience in this than me believe that as well. So if palladium sells off and gold does not, then that correlation idea is no good. If gold sells off on a palladium sell off, then I'm going to be paying attention even more to it. All right, it's 8:26. ECB's flat. We have some data today. I rarely actually pay attention to data, but how the market reacts to data. But if you stay with us at 8:30, we'll be going through that in detail with Larry. I'll be joining Larry and Michael for the AM roadmap. Have a great day. 8:27. Last print in gold is 1234.90, and it's looking a little bit heavy. See how it goes. Cheers.